Good morning, my friends, and welcome to the Breakfast Club. My name's Darren Hancock, and here we are on Thursday, May the 9th, 2024. And we're looking for some fun today. Looking for the little reversal. We're getting the reversal happening here today. Tuesday or Wednesday was the down day. I think my guess, and I guess it might be, we're gonna have an inside trade day today. I'm expecting an inside trade day today. I don't know why, but I'm looking at this mean threshold. I keep saying mean threshold. Consequent encroachment. Split the wick into 50% or into quarters and look at the 50%. Do we get a reaction off of that? And do we trade back down inside this candle here all day? And then Friday, smaller candle, smaller range day. And then Monday, Tuesday, we start to bust a move. That's my theory for the day. What comes next? Hey, bust a move, as the song goes. All right, let's look for, make sure I'm actually live here. Tommy's waiting in the wings, I know. He's going to be sitting there first through the door this morning. Tommy, there he is. There's my boy. Hans, good morning. Hope everyone's had a great day. Public holiday in part of Europe. Wow, you guys get a bit of a public holiday today. That's great. I hope you guys have an awesome day. All right, let's make sure I get back to my charts all lined up here. So let's get through this quick. I'm already a little 5 minutes behind. I'll leave let's do ES, and I'll get back to those. Let's just get on with Dixie here. Dixie run back up inside that weekly fair value gap. We hit the top of it again. That was an expectation for us. We've pulled back off it nicely. So looking at the imbalance, we have traded back to that imbalance already, and now we're back into heading towards the middle of today's range. Now that we've hit that high, we had a nice reaction off it. I'd like to see us dig deeper into this imbalance and then start getting down into this imbalance and obviously back into the fair value gap below us there. I'd like to see this stay open now, and I'll start to work down into the bottom half of this weekly imbalance on the US dollar. So do we have a reversal? We do right here on the hourly. Come back into this, look for a short from here. Not that you're shorting the US dollar, but that means we can go long for euro. Is there a setup in euro? Yes, there is. We have a consolidation. Candle closes above. We have a cam model 1 and 2, or cam model 1 entry right here, right back to that. Oh, it's already hit it. Shit. Okay. We've already hit it here. So you're looking for further upside. Oh, look at that. Oh, diggity dang. On the day. That would have been one to look for today, is a return to this order block and the fill of that fair value gap below you here. Anywhere inside the body would have been a nice cam 1 model entry there. And do we have that as a reversal today? Where are we sitting? Right here. Oh yeah, look at that. If you're looking for this candle here for it to retrace back to, and in the morning, and you saw this at 7:45 this morning, and the body traded above it, and you go, as soon as it trades back to it, I'll take it. Or if the body trades above this candle that initiates the run, comes back into that candle, you'd be smashing it. Smashing it. So now I'm looking for more upside now. So if we do have the American, let's go back to the dollar here. Let's double check this. Yeah. I don't want to see it revisit that high. I want to see it start digging back down into here now. It's at about, so if we come back into here, we're looking to fill this gap in here where we gapped up. Then if we get down to this next one, we're looking for this downside over here. Oh, sorry. Yeah, that's the downside. So we're looking for, reaching for these objectives here. Return back up into this order block. CAM model 1 entry. I guess if you take this whole range, that's the swing below, into new consolidation, take the low to the high, CAM model 1, CAM model 2 would probably be back to the session open. And you have both of them almost overlapping one another here. So we come back into here, catch that reversal off of here. Look for potential reversal off of here in your 1 minute chart. And then see how that coincides with your Euro and GBP. Looks like Euro is your stronger one out of the two. We're back to that fair value gap again. You want to see that dig further into here. So if the US dollar does continue to lose strength, we want to see that start to drop back into here, into that fair value gap there. And this, oof, we've got a swing right here. We've come back, hit it. See, now here's the reversal. So you want to see it run up higher, but you want to get back down into here. So we might just see a small range day back into this fair value gap, or even back into the wick. So look for, or sorry, the consequent encroachment of this inversion here. Look for this as the downside objective for the day. Keep an eye on your reversals. You could be reversing right here. 1 minute. If we get above here on the upside, come back, find some support at this. Look, it'd have to break this candle, its high on a close, to start getting back up here again if we're getting support off this fair value gap to go higher. New Zealand dollar, it's dug down into there. This is kind of like what I'm looking for here. This retracement back into this candle's high. And then catch a reversal off of that. Like this. That's what you want to see. And then continue higher. Australian dollar, a little stronger. Come all the way back. Fill that fair value gap. As long as we don't get a body close below here, then we have the main threshold of this candle, and obviously that deeper range. We'll be back down in here. Lots of relative equal highs. They were taken out already. See you later, love. Love you. Yeah, we've returned to this order block. Yeah, we're in this. Yeah, look for more downside here for now. We've got support off of this. We're into this. We're between this candle here and this candle here right now, and you're in a premium of this range. So even if you get back to 50%, here's your equilibrium PD array. So look for it to return into the bottom half of this fair value gap, unless we can get up on top of this. We need to get through the mean threshold with this candle though. Watch for your reversal. So here's your reversal here. We came back up inside it perfectly, connected with it, and we've got our downside run. So that was this right off that order block. That's why I'm trying to remind you guys about, if you see a key level on the daily chart and you're expecting some sort of reaction off of the low, the open, and the mean threshold of the daily candle, and you come up there and you just clip it like that, and you get down to your 1 minute chart and you see this reversal happening, you can get short with a level of confidence on that, saying, okay, I'm going to take that as the short. It's hit this objective. It's showing me a hallmark of a reversal, and you could be in a nice little run. And that's ideally what I'm doing. I'm trying to do every day, is just trying to find those optimum swing points at a specific time, specific price, specific PD arrays on a higher time frame. When they line up, you can get some winners for sure. I got 14 minutes. Let me get through this. Okay, Japanese yen back up into order block, body, and mean threshold. So if US dollar starts, if it just does a little pop back up, we're looking for it to touch this candle here and then reverse. This reprice rebalance is treated like a fair value gap. So look for a reversal off of this point. Again, get down to your 1 minute chart. Thanks. Get down to your 1 minute chart and look for a potential reversal that occurs in here. If it doesn't, look for it at the open of that candle. If it doesn't hit there, look for the mean threshold. Look for those as potential reversal points. And if there doesn't, then it's obviously looking for higher prices. Oil. This was our reversal in oil on the daily. We've obviously come back to that. So where are we expecting oil to go today? I'm still looking for this discount array. I'd like to see more downside prices on oil. Oh, there's 1 minute. There's the 1 hour reversal right here. So expect to see a reverse, this coming back up into the old lows, back up into this opening session price, and that little fair value gap sitting right there. That's ideally where I'd like to see that come back into. On the 1 hour chart. So anywhere inside these two candles here, and that will bring us right back into that inversion anyway. So if we can get a reversal back up into here, and I bet you that's 50% of that. Let's go into something here. If that's the downside I'm expecting, and I want it to get back into if that's the downside objective, which is this fair value gap here, if it's the mean threshold, look for that area of sensitivity. %62 puts us right on the reversal back to here. So if you watch for it to tag here, we get a reversal to 62% of that for an optimum trade entry to continue going shorter. Look at that as your objective. So I don't know, just trying to reverse engineer something there where I think it could go. We'll come back to that just to see if, out of curiosity, see if that hits that. These are all ETFs in Canada. They're all starting to improve again, which is nice. It'd be nicer if I was in some of them. Gold, we'll get that retracement in gold. So we have a retracement in gold. We got to get below this candle's low on a close, get through this session open, come back in it, find some support just above it, and then continue going lower. digging back into this discount array over here. Mean threshold of that order block all the way back down into potential run into here. Won't be wondering, we won't worry about these. Let's get over here, 21. Yes, so we've got this reversal happening here. Again, I want to see just that inside trade day. If we do continue higher and take out this high, look for, again, a revisit of that 4-hour fair value gap. I'd like to see this body take out that low, and then by the bottom of this inversion here, come back, find some support at it, blow through this, or run heavily through this to get a break in structure, then trade back up into it for a short. There's a lot of drywall dust in the house right now. I hate dusty environments. And the Dow Jones consolidation, the 15-minute. If we get a retracement back into here today, look for a return back into the daily fair value gap inversion here. I'd like to see this stay set in here for now for the rest of the week. Like Wednesday, make the high of the week, and let's just trade back inside here for the rest of the week. Then it's a matter of just trying to find your entry. You have a little reversal here. Body trades above it. We don't get back into it, so it trades through the candle that initiates it. You come back down right on top of that candle. Clean out the old highs. Imbalance. Overshot it a little bit here. Like array. There's a reverse here. Like array to like array inside this range. We trade it all the way back inside it here. Come all the way back up into, now you got a smaller range you're heading for. So you got this little imbalance here. Like array. Extend the range. Come all the way back and fill this one up here again. So you're inside that bigger range still. So you went to that array. There was no real other than this right here. We ran all the way through it down into a discount, filled that whole range up. Another reversal here. You've already taken the highs out, so that would be your objective. So be careful every time you overextend. If you get past your objective, you think, okay, well, is there a likelihood I can get back in on this and run again for that high? You've already taken the high out. Chances are we could run for the lows now. Or at least a deep retracement back into this rejection blocks, right? So there's your reversal. We had a body trade below it right here. That would, if that's your ideal entry to go long, and you've already, like I say, you've already cleaned out that high already. So unless you get a 3-pump higher, which is possible, but we've already traded below it. So you move to the sidelines and wait for a run above here, find support at it, and then push higher. But until then, looks like we got a swing point here. We're looking for 50% of that wick to hold price. We have a reversal right here. Yeah. I'm going to go short on that. We'll see if that pushes higher. It's right around the 50%. It's what I said we're looking for. So I'm going to look for that, and I'm going to put a stop loss. We have to put it up here. If we take that high out on a close, then I'm definitely on the wrong side of it. We've come back up at a perfect fill. That would have been the perfect place to put it. We'll see what we get from here. And it's 3 minutes before the opening too. Probably not the best place to put it, so I'm going to wait. Take $70 and wait for the opening. 3 minutes beforehand. You never know. This could be just shoot straight up. Could come tearing all the way down. You go, oh, I could have stayed in it, but that was my decision to stay out. So 3 minutes beforehand. We'll wait. Why tempt fate? Good morning, David. Talk. Good morning. Smash the like button, guys. They're probably like, no, I'm not hitting the like button. We haven't even seen anything that we like yet. Good morning, Jonas. Paul, welcome. You got away. I like it. You got away at the end of the week. Now watch this smash down and me go, oh, you just stayed in it. We got 2 minutes. So that was your reversal right here. Invest, have a trend line. It's rejecting on the 1 hour. Did you say trend line? What's a trend line? Is that an ICT thing, a trend line? That's like sacrilege, Tim. Talking trend lines. Every morning here for the AT boys in Pennsylvania. Early morning here. Does anyone else use NinjaTrader? Darren, can you explain what you meant about the two fair value gaps in tandem in the Telegram group? I think I misunderstood you. Okay, so when you have two in a row like this, and you have a bold candle that runs through both of them, take the second one, not the first one. And if you get a bold candle rip through that one, and that one, then take the order block that initiates the run. Yeah, if you see two in a row. Yesterday we're getting caught in that, somebody aptly put it, the bear trap. So we're trying to get into those bear type things. We're in a bullish run, and they create these little bear traps where you don't take out that down candle. One of the things I posted yesterday, which I did a little research on, which was this: if you have this one candle and you have the candle that initiates the turn, which is actually this one, but if you have this candle that initiates the turn and it overlaps right at the spot where you're getting your reversal, wait for the down candle to go, because what'll happen is you'll trade below it, but you'll trade inside this candle here, and then that creates that, oh, we've had a break in structure or a change in direction, and then it just goes snap and goes right against you. So that's the bear trap. It's that, you want that setup? I'll give you that setup. But if we break below this candle, then there's a stronger likelihood that we're actually going to go in the downward direction. This candle has to get taken out when it's in real close proximity to that reversal. Sometimes you'll see like the reversal happen up here and this candle's way down here, then you can get in on it. But if it's like literally overlapping it, you got to wait for the downside candle to get taken on the other side. So see how in this case here, we've got this one that's really close. Body breaks below it right here. We've traded all the way back up inside it. Body's respecting this right now. Or if you look at this is the one that initiates it, this is the swing point. So I guess you'd look at that one. But this one here, if you use this one, you'd have to wait for the body to trade below it, come back up inside it to get short. So that's what you want for confirmation. So expect to see this kind of run through this candle here. This was just a come back to give us our entry. I hope that you understand. You get that, Paul? And sometimes if you have a triple, 3 of them in a row, then go to the third one. If you get a bold candle, go straight through them. If you got the little candles that go one at a time, then obviously take the first one or wait for the opportunity to get the first one. But if it continues to block through it and doesn't give you that entrance, always take the one that's just behind it. You still have to put your stop loss above the high. $244.5 I have as resistance on NQ. $50 of that wick. I don't want to see it go above 50% of that wick, which is just above us here. So anywhere near or around that 50% mark, you look for a reversal to happen. And that's ideally the one you want to get in on. You want something clean. And this, albeit we were on that, your stop loss would sit here. That's your setup right there. No bodies are traded above it yet. And we're still getting some good downside. So you'd be paying yourself here and here, whatever. Pull your fib tool on the whole thing, pull your 50%, whatever method you're going to use on that one. Good morning, Vector. How are you? Fernando, good morning. Thanks, Darren. I see what you mean now with the fair value gaps. Oops. Lows are taken, albeit with a wick. I'd like to see a body take that out. Come back up inside here. We've got a body trade below this now. Trade back up inside it. Continue down. Let's go. Nice continuation. See, we could have caught a nice one there. What's that? 30. 30 makes the high. 36. We should be expecting a crazy Ivan around here. 30 to 36, and then the reversal. This might actually go back up higher. See if this can push us all the way through. You got to get through here now. I'm going to close. Yeah, I don't understand your 24, 5. That's like, are you talking about this old high here, Tim? Like right there? I got 2, 4, 3. The high is 242.25. Is that your resistance that you're looking for? Ideally, I'd want the resistance to be the 50%. If you get above that, then we're looking for the highs. I think I just anticipate this as being just an inside trade day, just trading back and forth inside this candle here. It's wicks. We may just end up down in here below this daily price imbalance. Back to here, back up. Just start running back and forth between these specific arrays. 50% of that wick. Unless it rolls over and just keeps coming back down and just starts driving all the way back down into this imbalance down here. And yesterday was the last 5 day. 2, 4, 5. No, yesterday was an 8 day. No, it was not 8 day, it was a 6 day. Yeah, expecting an inside trade day. Keep coming. Do I use immediate rebalances? Yeah, sometimes I do. I like to look at them as fair value gaps. Like Michael says, an immediate rebalance, you can ignore the wick and just pretend it's like an open fair value gap again. They're a little, you got to be careful how you, when you see them, you got to watch how you can use them on a reversal. Like if this was a rebalance all the way back through here, then went all the way back up, that would be classified as your still a fair value gap for a reversal. I'm more along the lines of something cleaner so that everybody can see something, a cleaner reversal, but yeah, you can use imbalances as well. They're a little more challenging to see because your eye just goes to these fair value gaps quick and easy, right? So look for over here, downside price. You want to see it get through this on the downside and run deeper. What trade here? That's the fill. You want to see it push through here now. See, I talked myself out of that trade this morning because it was 3 minutes before. Instead of saying, hey, look, it's a nice setup. Take the setup. If it takes you out, it takes you out. The psychology we play with. Okay, so here's your, oh, there's one down here. Sorry, I didn't see this guy down here. You got one right here. This is the one you want to see get through here too. And there you go. It came back, filled it, and then continue pushing through. Now you've taken that out on the downside. So if this is an internal range day, we're looking for a reversal to happen, a nice clean reversal. The 10 o'clock would be nice to see it take out these lows, get back into this, the one that initiated this first big run up into the high. If we can push all the way down into here now, as like array to like array, you hear me say that a million times. And we're digging into it now. So like array, that one we entered in on earlier, to like array would have been freaking bomber trade. That would have been what, 100 and someone? No, not even 100. That would have been 198. We'll say 200 there. 200 ideal down to here. So 75 handles. If you can make it to the bottom, it'll be 90 handles. From extreme to extreme. Oops, that's supposed to be right there. Yep. That'll be 90 handles there. So anyway, you're looking for, just because we missed that, who cares? Like you say, they happen all the time, right? You've come back to the discount array now. If you key off of that and start running back up, we're looking for a break in this change of direction above this fair value gap here. So then you go from like to like again, because there's nothing inside this run that shows you that initiation of the so you have to use this one in the larger range. Good morning, Russell. We had 700 people yesterday, 700 subscribers, and then I was like, yoo-hoo, we hit 700. And then all of a sudden it went down to 698. I thought Derek's pulled his number out again. He's going to come back in his lucky number 7. So ideally, I'm looking for this reaction off of here, here, or here. That comes all the way back to this guy who was never filled. Yeah, it was rebalanced, but I'm saying it hasn't been filled from an inversion perspective. So we'll see what there's the middle one. See that a little reaction you get off that? I love to see those reactions. If it drives through there, that's okay. I just like to see it tap it and you see some snap off of it like that. That sure just shows me an area of sensitivity. Imbalance here. You see how we're reacting off this, the top of the daily fair value gap as well. So you're going to see there's an area of sensitivity here, which coincides with an area of sensitivity that we're looking for over here. So this is where you're sitting around a time and a price where we expect to see, are we going to retrace back into this range? Are you going to be happy with a 90 pip or 7 pips, not pips, handles, 50 handles, 30 handles inside this run? Oh, where were we over here? Was it Japanese yen? I want to see if that one panned out. What was that one we were looking at for? Oh, it was oil. Oh, it just overextended a little bit further past what I was trying to predict, which was that fair value gap there. It just went just past it to the, okay, to the mean threshold. Fair enough. But then the retracement back to 62%. Yeah, blew right through that, came back into the premium. So here we've got an imbalance. Price trades above the imbalance. We trade back into the imbalance right there, right on the top of it, continue higher. You use imbalances the same way you use the fair value gaps for reversal. Here's your reversal here. Body trades below it. We trade below this fair value gap here as well. See how they overlap one another? This one here is tied up tight with this. There's a small one here as well. 1, 2, take the second one. And if you have a candle that rips right through both of them at the same time, it comes back up inside. You can take that short, or you can take it short inside here. You run, now you're running for a discount array. Is there a discount array over here? In a larger range. Yeah, you'd be aiming for somewhere around here, but that's already been taken. So if you take that low, there's nothing below you here except for clean air, equal lows. So if you're managing it from the back end, you wait for a reversal to happen so that when you get a clear off the reversal side, then you can scale out your, or take out your trade. If you're managing it from the back end, we wait for a reversal, nothing, nothing. And then we see this right here. And you go, okay, now I'm out. So now I'm going to take this, changing direction at a time we're expecting a reversal anyway. Fair value gap or this imbalance breaks that and you go, I'm out. If you really want to squeeze the juice out of there, you say, if it comes back into this, I'm going to take an extra handle or a quarter, 1 penny. As soon as you see it break that, take yourself out and then say, what, right now, if it comes back into that, I'm going to go long now. You can trade both directions. If you're savvy enough to catch this point right here, where you break, come back into it, go long again, inside a range. And that would be an optimum trade entry on that higher range. 75%. Retrace it all the way back up to 75%. And if you used your fib tool on that, you'd be like 50% right here, break even. Then you hit 60%, move it to 50. Then you hit 70%, move it to 62. It still hasn't taken you out yet. Then it goes up to 75%. You move to 70, and then it takes you out. So you would have had maximum profits on that return here if you'd caught that. You catch that one on the run down, that one on the run up, and use your fib tool to scale you out. You would have maxed profit out on that, and you would have maxed pretty much most of your profit out on that one, except for that little piece there. They're really good if you catch them and you're savvy enough to say, oh, I've made a whole bunch of money here, and now your brain starts to switch you over and say, now do you want to go long again? After making all that money, you're going to put it at risk. That those are all those head games that start to happen with you right at this point where you say, now I'm going to catch that as a reversal, and be confident enough to catch it with your stop loss sitting down here. Anyway, you get my point. So I want to see that break. Good morning, everyone. Hit the rejection block on the 1 hour. I'm going to switch this over to 1 hour now. Ah, yes. Good call, Paul. And I'll see a return to this fair value gap high again too, right? We expect some resistance off that. So now what we're looking for is this. So if we hold off now, broke that high, we get a reversal here, and we dig all the way down into here for 10 o'clock. You don't see a body get above here. See how we're banging into this old low here. Oops. It's like one of those bull traps. If you overcommit to this too early, like if you're catching this and you say, I want to catch that as a long now off this order block here, there's no significant reversal. This wick here, I'm curious to see what happens at this wick. I've got a body traded above this. It is more bullish for me now that we've broken this high here. This high of this candle. We have reacted off of this. Yeah, it's a wait and see game right now. Abs, congratulations to you. I'm surprised you didn't have more subscribers. You don't have more subscribers than that. I don't know. Apparently the algorithm doesn't send you out there until after 1,000 or something. You might get a little sampler. I don't know if you remember that day back in February, I think it was. The last day of February, we had like 100 people suddenly pop in and subscribe. I was shocked. I was like, where are all you people coming from? They said, oh, the algorithm was delivering your as a suggestion. So I was like, oh, they must just give these little teasers, little samplers every once in a while to see if you're motivated to keep posting stuff on your channel. And then somebody else mentioned last week, I think it was, that the algorithm doesn't really start pushing your channel till you get over 1,000. So I thought, oh, I can see if you're YouTube and you've got millions of people that are putting stuff on there, you want to motivate them, then you want to know that they're committed to putting on content all the time. So they have to weather the storm. It's no different than going to paramedic school. You do all the grunt work. You drive around all over the province looking for work, doing shifts everywhere. You spend most of your time driving around the province. So you put your time in. I don't mind putting my time in. If we get more people, that's great. I'm quite content with 700 people. 700 people learning, eager to learn. Man, that's way more than I thought we'd get. And it's great. I appreciate every one of you. Thanks, Shepard. Yeah, that like button is a very sensitive button for people. Very sensitive button. Did we close above that? We did, didn't we? We're digging into this now. Let's wait for 10 o'clock. You got to be patient. Oh, that live trade's still going good. Yay. Okay, move that to well, Swissy, US Swissy's doing I don't have it on here, but US Swissy. Guys, look at US Swissy right now if you've got it on your charts. What do you see? There is the break above. Tap in, start going higher. Put one on that. Oops, a little late, but I'm just going to put this below here now. It wouldn't be down here now. Because if we break this on the downside, then we're going to go shorter. And I'm right 2 minutes before. I said I'd wait till 10 o'clock, but look at me jumping the gun. No, I don't want to lose this because it's 10 o'clock, so I'm just going to stick it up to break even and let it run now. So that's the reversal we're looking for here. And so what premium array we're looking for here? Or let's pull the fib tool off of here if you want. You can manage it for the fib tool, provided it gives us something enough to trade here. So now you move to break even, 50%, take some off there. And now all you're going to do is just going to manage this from the back end. So if we hit 62%, I'll move it to 50. I've only got one on here, so if I go chasing right up to it, it'll just tap me right now. And there's 10 o'clock. Now, if that's a discount array, the premium array is above us. If it doesn't come back and take me out, the premium array is sitting above us. So that'd be my upside objective I'd be aiming for. And there's liquidity above here and here, obviously. So now we've just popped up above the 50%. We could drive this all the way back down again now. So this is more like just covering your butt here now. We're so close to that 50% range. So as soon as it hits 60, we'll move up to here. I'm going to move up there right now. So this is a quick way of trying to manage your trade. If you're looking, you don't want to try and, you're not absolutely sure about your PD arrays, whether or not they're going to provide you level of support or resistance or whatever, and you just want to try and manage it quick and easy, or you're still trying to hone your skills with your PD arrays, then use the fib tool like this. Bring to 50. As soon as you hit 50, bring yourself to break even. 62, bring to 50. There's a fair value gap there. That's why you want to pull it up tight, just in case this order block holds price and this reverses now and comes back down on you. At least you get paid. And I know it's not a way Michael trades. Mike will just catch something and let it run all the way up to the top and endure all these reversals. So it's bouncing off of that midnight open candle. That's midnight open right there. You want to find out some support there, but we're like right up close to the place that it can come back and take us out. It's actually it's hitting inside this fair value gap in here. It's come back down to the bottom and just keeps tapping it. I suppose you could sit just below that, because chances are it could come back and just tap the 50%. And there's a little tiny imbalance right here. There's 62. Okay, so now you'd be moving to 50 for sure. Now I'm going to move it right up underneath here. As soon as it hits 70, we'll shuffle this up to 62, and eventually it's going to take us out, obviously, because they get smaller and smaller until you get the 88%. If it busts out above this and we don't get any reversal coming back and taking us out, and you get to 88%, you can either close it there or just let it buck to the final top piece here. Look how close that came. Let's keep it just below that fair value gap there. Yes, bet you lost track of where everyone is from. Yeah, I did. Remember when I was writing it down, saying, hey, where are you from? Then that day I got so many people coming through the door. I was like, where'd you come from? Hey, where are you? What happened here? Then I think because the algorithm was pushing the show out there, and I missed the in the end, I just went, I have no idea where you're from. So it's nice when people just say hello from Sweden, or hello from Denmark, or hello from Morocco. I love seeing all that kind of stuff, right? So we've hit 70. So you could have this as a pay point here. You could be up here putting like you'll put like a buy one here. Oh, see, now we're up here. So now we're going to go to this one. Now we're going to go to this one right there. See if it's 79%. And we're out. Woohoo! So that reverses and comes all the way back down. It basically came back into this big old breaker right here. So if that reverses and comes back now, we just managed to nail that right up there. We maximized the profits. That was like $700, was it? $700, $630. So if it reverses now, optimum trade entry, boom, on the way back down again. And we just kind of snuck it up there, right behind an entry right here. So $600. That's more than I made as a paramedic in a day, without overtime, of course. Overtime was you always make a killing on overtime. And Christmas, triple. working it, you get what we call a triple hours. You get paid 3 times your wage on Christmas Day. And then the next day was Boxing Day, so you got paid triple again. Yes, but I lost track of everyone. I will bring you a new subscriber to the channel today. His name is Domingo. So be on the watch for our new family member. Oh, good. Thank you, Tommy. I'll just tell Domingo to let himself be known. Say hi. And we're happy to welcome him. Paul, 15-minute inversion with the midnight open coinciding. Abs. Yes, very nice, clean. I missed it. Chris, you passed? Woohoo! Way to go, Chris! Chris gets the public recognition. Chris! Gotta make sure I got it. Is it challenge? AANG? Anyway, you know what I'd be, Chris. Yay, Chris passed! Woohoo! Way to go, Chris! Man, you don't need that kind of text. You need something like this. Let's make it. Let's make it. Woohoo! Way to go, buddy! Good work, Chris. Is it ENGE? Can't remember if it's ENG or what. But anyway, or ANGE. Anyway, congratulations, Chris. Well done. Well done, son. So inside this range here, we have a reversal here. Back to this guy here. So you're from here to here inside that discount range. And keep your eye down here too. We're hitting 10 o'clock. So is this the... This could end up being the silver bullet entry for a short back into this range here. If we get a silver bullet here or right here. Which one will you take? And there's only that little swing point there. We really didn't break a significant high with this reversal. So be careful that we don't just end up getting another price leg up here. So now I'm starting to talk you guys out of a reversal. Or a change in direction, I should say. Yes, I know it's silver bullet time. There's the if we get right up in here, I'm going to take that one for a short. Not quite catching that silver bullet edge there. We'll wait. These setups happen every hour. And we're sitting at 450 reversal. 7, 6, 7. Here's the squabblers. You heard me talking about this yesterday. Here's where the squabblers come in. Thank you. Now just have to hold on to the PA account. That's not the mindset you have to say, buddy. That's not the mindset. It's like, now I'm going to kick ass and make some money. That's we're going to use that as the reversal, or as a stop loss. So I'm going to let that sit right up in here as the silver bullet for a short. If I trade a body above that, which is, main threshold is definitely a possibility, but then we could get the push up higher for this higher liquidity. So if I'm wrong, hopefully, yeah, I don't want to see that go any higher than that. We traded above it, so now I have to close out. Shitballs. So as soon as that closes above here like that, if your stop loss was sitting up here, you want to get out. As soon as that opens and you see it pop up, that's where I get out right there. That I'm on the wrong side of that. And again, we haven't broken above a significant high. So here's another reason why. Is this a really strong possibility? It is in the premium array in terms of that optimum trade entry. And if this holds now and the stop loss was up there, I didn't follow the rule of putting my stop loss up here. I just looked for this. If it broke, then I would have been out, which I would have been out anyway. Now, if we get something that runs up above here into that premium discount premium range, inside the higher range here, if we get something above here and then comes back down, then I'd say that's a better reversal. This might have been that bear trap again. We did not trade a body below here. See how the wick got below it? This candle sits with that one. We did not get a body below it. Caught in a bear trap again. I got to wait for this candle to get taken out on the downside with a body. We'll watch to see if this happens now. There'll be a bit of research for all of us. Let's wait and see if we can see this candle get taken on the downside and then trade back into it. See if this works. See, we're looking for a short. This here is my fail safe, and if I lose this because of this, I'm not going to beat myself up on this, because this more often than not saves my ass for a change in direction. And it just broke down through it again. The body traded below it here. Clearly that would have been a nice run now. It's good. There's an area of sensitivity there. How you work this now, do a little research now and work that out inside your charts. Like array to like array. So that's hit that right on the bottom. Nice. And if it pushes all the way through this, gets underneath it, now look for the lower one. Yeah, anyway, I would have sliced that. I would have taken my fail safe would have taken me out there. That's my own set of rules anyway. Bodies are respecting this discount array here. This is that buffer thing I talked about. If you can get in on this, get out on here, get back in here, get out of here. So watch it, see if it comes back up into this area here or this area here for a premium from in here. This is your discount. There's your premium again. See if it makes its way back up here. So what you're saying, Talk, is you got 18 handles out of that because it set up perfectly for you and your setup entry was good You saw the where it could fail, and if it fails at this point, you know, make sure you follow those rules. Don't harp on the. I'm happy that you made your 18 handles, but keep saying to yourself over and over again in your mind, did my setup hit nicely? Did my fail safe work nicely? If you've got one, where's my rejection point where I know if it passes this point, does it fail? If you don't have any of that stuff in, you've just got, I'm just trying to catch a quick reversal here and my stop loss is sitting up there. That's fine. That's as basic as you can get it. Then be happy with your trade. But celebrate your setup and it hit the objective that you're aiming for. Keep playing that over and over in your mind, because if you keep focusing on how much money you've got or how many handles you got, that's all your brain will look for instead of, did I get the setup I was looking for? It's really important what you put inside your brain, what you say to yourself, self-talk, all that is so critical. So critical. So reinforcing your mind, yes, I got a great setup there. I have to reinforce it in my mind when I see this going this way, that I did see a reversal there. And yes, my fail-safe kept me out of the trade there. But that's okay. Celebrate my fail-safe worked for me here. And I'm not going to beat myself up on a decision I made here based on rules that developed around breaking that high. So for this one, it would be like, I wouldn't get back into this now until we break that low again. And then this candle, or sorry, this candle here gets taken out on the downside. And as you saw, it just gets a wick below it. If the body had traded below that, came back up into it, then yes, you could get short on that. But it didn't. So there's another rule. I'll just say, good. Well, didn't make my rule. So I'm not in the trade. But I am doing great over here. Lovely. Ooh. It looks like our, so look for down in here still. As we start to break through this piece here on the downside, you want to see a body pop through here and hold, and then look for a reach down into this fair value gap below us here. That's the draw on liquidity. If you're doing your fib tool reversal like we just did on the way up, you can rinse and repeat on the way back down. So you hit 50%, move yourself to break even. You hit 62%, right here, it came back, took you out. So you would have just got 62% out of that. It would have came back and cleaned you out. And again, if you want to develop rules around how you pull a fib tool, that's entirely up to you. But if that's how you just look, I just collected 62, scaled a piece out there, moved to 50%. You just made a big chunk of change there. Nothing to scoff at. Now, if this would have came back and you could have got in here again, you could have got short on that again to 50, 62, 70, 75. You could have caught that all the way back down. Just re-challenge that. Because this is all like buffer. This is all, you're kind of putting money in your pocket in case it runs back against you and does end up taking these old highs out here. CAD is giving us a nice little reaction. Oh, that's not CAD, that's Japanese yen. Where's CAD? Right here. on the 1 hour chart, catching a cam model entry here. Nobody commented on that Japanese yen one I was talking about. Oh no, Swissy. Yeah, Swissy just gave us the same thing here. This was a cam model entry I took here short on a live trade. So that's a cam model entry one there. Scale out here. Consolidation to consolidation. Cam to cam. Pay yourself. Take a portion off here. And if it drives through this candle's mean threshold to the downside, we get underneath this, then you're looking for further run down into here. Back into that discount array. And that should be that fact that the Dixie is losing power now. Yes, right off the top there. Nice. Came back through what we were looking for. So all these were further upside. Good. That we've got our, there's no reversal here. There's one little piece here, and we've got an old high, a premium over here. You're in it right now. Pay yourself there. Rejection. Oh, here's the reversal on this side. Yeah, that's where it keyed off of there. So anywhere inside here to here now. No, draw this over here. We'll see what happens to this today. But that's the level you'd be looking for right there. Start paying yourself at. Once you get in here, start paying here. Maybe a little there. At the rejection block is that old high. So look for, again, still look for this up here. See how this body traded below this? You say, okay, we could be going lower. Then all of a sudden it traded above it. Now you're going higher again. Come back, find some support off that candle's wick right there. Pushing higher for the area we just mentioned, which is right here and here. Premium and discount. Just keep looking for that premium and discount all the time. As soon as you hit that premium level and the discount, start looking for, if this would be a logical place for it to reverse, which would be a fill of that fair value gap inside here, which would bring you right up into that one there. Then you could say, and see how we get this good nice wick off of that? Wait for the next candle to close. And if this is a swing point, which we look for this candle to close, you say, oh, that's a swing point. Good. That's an array. Where's a discount array inside this range that we're in here? What do I want to aim for? What's a logical place for it to reach for? First one is this one. Then there's this one. So if we get this one here now, and we start extending, we have to extend this range. Where would be a logical place to extend down to? This pocket right here. If we extend above it, we want to get above this candle here to go break this little trend line phantom that's starting here, above that, and start reaching for this other PD array above us. And again, little pool of liquidity here and that high. Which I don't think it should go up there. If we're looking, oh, that's the hourly, sorry. It could go all the way up there, yeah. I want to stay inside this range. So yeah, you could take this high out. As long as we stay inside this candle's high and that candle's, or that candle's high and then low, we're inside trade day. That's what I'm expecting today again. So here, now we finally hit it again. Bang, 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 3 times. We're in here. So we're hitting these wicks, hitting some resistance here, right? So we're going to roll over here, come back down, or get above it. You want to see this one get above this one too. So I'm going to actually pull this up to here. That'll give you a feel for mean threshold, which is this one, and the high is that one. So you want to see it close above that one there to go higher, because it's the premium array, right? So if the premium array, you clear the premium array, you're going higher, or a higher likelihood of you going higher if there's not like a little order block or an imbalance just above you. Bottom of the hour. 26, 27. There's 27. Remember the numbers I gave you yesterday? Profit target hit today. I'm closing my trade station and stopping. Way to go, Dave. That's some discipline there, brother. There's some discipline there. Good for you. Meaning 2 setups that I followed, not profit. Oh, you didn't get profit for it today. Sorry about that, bud. Post the chart on the Telegram. Let's have a look at where, or do you know where it broke down for you? Like if you go back over and break that trade up, did you get in too early? Was there anything that did you follow the rules perfectly? If you did, don't beat yourself up over it. Let's just go in and see if we can't analyze where it broke down so that maybe we can all learn from it. If you're keen to post your trade. Exited at the 1056 bullish order block. So you got this candle here. So we're in a smaller range now. This one here and this one here. We've got this reversal. Not a reversal. It's just this fair value gap. We break below it, becomes inversion, come back up to it. What are we reaching for? A discount array. You've got this imbalance sitting right here and this order block here. And we're back into this inversion again. So look for this. You've got 1, 2, 3, 4 different arrays to reach for in a discount portion inside this smaller range that we're in right now. This is more of a consequent encroachment or equilibrium of that range. So I would be okay to see that trade through that, which we just saw the body get through it here. Came back up, found some support at it, pushed through for a discount array. I'm all right with that. Makes sense. Making sure my trade isn't oh, I'm out. That broke that right there. I just closed that trade out. So discount array inside this range. Did we get a discount? It does look like we did break 50% there. Yeah, just broke 50%. And we came back to right on the edge of that imbalance right there. So like Michael says, man, those imbalances, I tell you, they are important. And that's just below the 50% mark. So what a nice place to reach for. Now you're reaching back up into the premium. And look for this as the next potential price leg up. If we blow through this now, look for the extension of that to here. 18.18.5. Get above here. If not, we're back into repeating here, back into the smaller range. There you go. That's what you want to see. Get through the mean threshold of this candle as well. Close above that. Still looking for this higher array. So you went to optimum trade entry, reverse down to optimum trade entry. reversal, then optimum trade entry again, back inside this big range. So if this reverses again, look for smaller ranges and smaller, till it has to bust out of here. Ideally, we'd like to see it get out of here now, but we could get smaller, little smaller ranges in here as it slowly creeps up and then finally gives it a lift. To move this along. Mean threshold. See how we get a reaction off of it? Back into here. We want to see a body get above here now, right? Otherwise, it's just this buffer thing we talked about, buffering down, coming back up. This one here, enter it in, buffer down, come back up, come it down, come back up. So you're repeating, you're hitting it and hitting it before it finally breaks through. So I want to see that get through there now. There we go. Come back, find some support at it now. We have a little imbalance back here. Start pushing higher. It's too premium for me to play in right now, but we're just watching price action, and it's reacting nicely off the areas we're in. If you're shooting into this, you're trading this right now, you're gambling off of a PD array. If that's your setup, then it's not a gamble for you. Where does it fail for you? And if it fails for you there, then make sure you've got your stop loss sitting just below that. So if it does run through it, you may put your stop loss here, but as it runs through it on a body again, you go, I'm on the wrong side of this. This just ran up into this mean threshold of this candle here and reversed and come back down and took me out. So if you just try to catch that on top and then run away and it trades it back against you, that was the point it hit. It's that mean threshold right there. So have your confidence to know where it fails, where it doesn't fail. And if it fails there before it hits your stop loss, then get your trade off. And you're buying a premium. We want a Derek discount. So I love about Derek's entries. He'll look at a run like this and he'll go, well, if it gets all the way back into this array down here or something that's significant, then in a discount range, then I'll take it for a long. He wants a range and a well-placed, not just a 50%, but a nice well-placed PD array in a discount portion. If it comes to him, great, he'll take it. If not, then he'll let it ride. He'll let it go. Oh, yeah. Donuts are on you tomorrow, Chris. You are progressing, buddy. You are progressing. You're doing great. You're passing now. It's fine-tuning that thing, hey, that instrument of yours. And what's between your ears is your instrument. How you focus, the discipline that, tune it in. That's the price leg completed. That's done right there now. That leg there is done. So if that continues to push higher, excellent. And those of you who took that as a disciplined run to a higher price, then you just benefited from that high getting taken. Good for you. So if that's your fail, if your fail safe was below here, then you made some cash on that. But have the reason sitting firmly inside your head for where it fails. If it fails, you're on the wrong side. A lot of times your psychology will hold you in a trade longer and knowing full well it's trading against you, but you'll hold yourself in there in a private desperation that it's going to change and head back the other way. And before you know it, it took you out. And then you beat yourself up after the fact and say, I should have got out of that. right? Instead of stick with your rule and your fail safe, that's the part that gets Chris his combine account, because you get disciplined enough. ThetaWaveTrader, get inside that theta wave mindset, the ultimate focus. That's what we're all aspiring to get to. Look for this guy up here again. What a delicious opportunity, hey? You go long, come back, catch the short coming back, buffer it up, run back up. If it comes back down again, this one you pretty much just let her buck, let her run. If it comes back down, that's great. You can try and catch a little bit of a discount, run back up. Dang. You can just see how all of those worked perfectly for that final hallelujah chorus right there. Do I ever mention this to you guys? This thing is called a like array to like array. It's discount array to a premium array. Premium discount, and back up to premium. That's staying on the horse, folks. Staying on the horse. Now you can take these highs out. But Michael would have been into this trade and he would have just, yeah, whatever. I don't care about that. I know that that's the objective I'm aiming for. And he'd be clearing that liquidity we just talked about over here. Order block here. We just came back to the bottom of it right there. Are we reacting off? It's the highest up close candle. I love to see that little reaction off of it. Come back, crouching tiger, and then blast through. So nice little liquidity pool runs. Hopefully you guys got to see some logic in that today. You're all in Ohio. Just bring the donuts. Just go over here, Chris, and hit your donut. Chris's donuts. It's like Derek. He makes his breakfast every morning. They're low calorie. I don't get fat on Derek's breakfasts, so that's a good thing. So we've taken the high out. Do we expect a turtle soup here? It's 38, 40, 42. Watch for a reversal. You've just taken these highs out now. You're looking for a reversal back into this range. If we're looking at this wick, I don't want to lose any more than 50% of that wick. So look for a reversal at the wick, the wickety wick. $18 to 18. 18 to 18. So up in here. We don't want to see a body getting above that. Otherwise, we could lose my idea of an inside trade day. Russell's like, I live in Ohio. On the far east side of Columbus. I'm near Youngstown. You can't eat those. Turtle soup, my fave. Why did he name it that? Well, it's like a turtle. It pops his head up, pokes his head out, and then retracts back in. That's the turtle. And you get to feed on it. So I guess that's the soup part. That's how I imagine it. That's the turtle in the soup. How's the euro doing? Still climbing up. We want to get into that fair value gap above us. This is the, look at the difference between euro and British and the pound. So this is fiber moving up into that fair value gap, looking for that, these equal highs from yesterday. And these guys are just barely trying to get into this fair value gap in here. They're not even nowhere near that yet. This was the CAD. Got my trade off there. Close that. Wait, so I want to see if this trades below here now, comes back up inside here, even though it doesn't take out an old high. This could be just coming back. We have an overlapping one. You see, you have one that took out the lows, which is this guy here, to run higher. It came back into that inversion. So is it going to go back higher again? Or is this, which did not take out that high, going lower? The stronger one looks like this one to go higher. Equal highs up here, right? So what I want to see is this one trade below that level close today. Then this one loses its luster. This one becomes a little more significant, even though it didn't take an old high out there. So you got to be cautious that we don't run back down into 50% of that wick, or running back to fill this fair value gap below us here. If the price continues down, like we're expecting Dixie to do, if Dixie continues to run back into this little imbalance down in here, or the bottom of the weekly range, and then back up again, we could expect the same thing to happen in British or the Canadian dollar, right? If it continues to run down, we want to see it run into this order block and then kick off and run back up again. So overlapping ones, grab your array to array, like premium to discount inside this range here. Grab that. Cam model 1, 1 to 1, grab the range in between, move to the sidelines, take your profit. Where's ES sitting right now? Okay, so we've come all the way back into here. Ooh, see how the body's traded below it? Up inside it, reversal time. That is looking like a potential turtle soup. This kind of order blocks down here, right? So this body broke below here, come back up inside this, traded all the way into there. So now I'm expecting a turtle soup. That's your reversal. You see, you break an old high, reversal, body breaks below it, you come back inside it, all the way up into here. No bodies broke above it. Now we're looking for a run back into this range here. That's that staying inside the trade day. Come back inside now. Now I want to see this traded below here. That's extra confirmation that we've got a little bit more bearishness. Pull your fib tool, do your fib tool thing if you want inside this range. What's the psychology you're trading by? Oops, let me get my real one here. Retracement. There we go. Fair value gap. Did you pay yourself there? Maybe that's where you want to pay yourself a piece here. Old high. This could be a reversal. So all the things, the possibilities you want to think about, or you just say, no, I'm going to stick with my original idea. We come back into that little imbalance you see right there. See that? Nice trade below it, came back up inside it. Keep pushing through. I'm going to put myself into a profit and let it run. It'll probably come and take me out now because we got this fair value gap sitting above us. Back up inside that imbalance again. Now, give me some legs. Let's go. Come on down. I don't want to see that revisiting this again. All right. Well, now you wait for another entry again, so that we'll buffer this. That's an entry right there. That gets us in again. Stop loss will go up here. And if we get this trading above us again here, we're out. Okay, so it closed right on it. See that? No, there's no, for me, there's no more reason for that to go back up there. So I'm going to move my stop to here. Be just above here. Just above that one there. No. See, to me, there's no reason why it should keep coming back up in here. So that buffer, you pay yourself there, that little piece. If it comes back, you get in again. And if it's wrong, then you just offset whatever losses you would have taken there had you stop loss been above. Now that was, for me, that's body is traded above, so I'd be out of this anyway. So the buffer that I made money here and whatever I lost here was offset by the money you made in that one. So if that continues going up higher now, because we've broken this old high, we're back into that high, running back up, and we're also above this fair value gap here. If we get above this one here, then again, you have an inversion. This one here takes out this low. Body trades above it, comes back to it, finds support, continue going higher. So you got overlapping, one going higher, one going lower. And that was the, for me, that's the telltale that we're going to go higher, along with confirmation that you've just come back to this one as well. So I'm expecting this to go higher. I'll be right back. I'm just going to go for a quick pee. Yes, it's going higher. That's the, we didn't want it to go above 1818, right? 218. That's that 50% mark. You got to be able to catch these. This was like a turtle soup that we were looking at. Yes, you got a chance to run in on this short little range here, back to an order block. And then when it finally, you see this starting to form here, this is where I have to try and get train my eye quicker. I don't catch them till after the fact. You say, okay, we've just taken out a swing point, and then all of a sudden you see there's a fair value gap forming that, and you see this one shoot straight through it. You think, okay, am I just coming back to this one to go shorter? Or have I just taken this one out to go longer? Ideally, you want to see this just keep running all the way through these, right? And it doesn't. So now you get into conflict. Is this shorter? Is this one longer? Then you find support off of that. You think, great. Okay, now if it cleans out this old high here with a body and comes back to it, find some support at it, will we start to leave from here? So you see there's a reaction off of it right now. See it? Let's just keep an eye on this area right here to see what kind of reaction we get off of it. Or is this the turtle soup we've been looking for? The 50% of that wick. Immediate rebalance. I'm going to look right here. Come back, hit it. This was somebody asking me earlier about, do I watch the, do I, work off of imbalances as well? There's one right here. That's an immediate rebalance, come back through it. So you treat it like a fair value gap, came back up inside it for a short. Look, which discount array am I aiming for? Let's get out of here now and move it over to here. It's that guy there and this guy right here. Also here to here. They're overlapping each other. So in order for this to go more bearish, I want to see this close below here. Take this low because they're overlapping this order block that initiates the run. That would be like a short opportunity to get down into the discount portion of that range. And then you want to see it blow through here with a big bold body, come back up inside here, 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 and here. There's multiple different arrays that you want to run back into to go short if this was the 50% of that wick. So that's arguing the downside direction. Can you argue an upside direction from here? Off of this guy here. If we start to eat through this, which we've already eaten through it once, twice, all the way through it, we've come back. Now we're hammering on it for a third time. It's like hammer, 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 pop right through it into the discount range. So we'll see if this one holds price eventually at this. So far the high is, well, the open is holding price. This whole range here, from here to here, equal highs. 50% has been breached off this candle. Push back up to this candle. Fair value gap. no significant low swing. So if you get back on top of it, it's an inversion fair value gap, not a reversal, just a change in direction. So we change direction to go short to get to 50%. Then we pop back up. If we run through this, then we're going to go longer to run up to this array, which is the mean threshold. If we stay below it, we're looking for this array down here. Then that's how I'm kind of looking at how that price would run from one to the other and keep moving back and forth from premium to discount all the time. You're going to try and stay on the horse, right? So right now, that's my narrative for where I expect to see price move to logically. For me, that's the logical direction it would want to move. And I constantly look for these little small ranges that I'm in, because this one here is not a valid candle. So you can't say, well, aren't you inside this swing right here? Well, this candle hasn't been validated on the upside. The old 11 o'clock. So now I'm definitely looking for a reversal. Out of curiosity, I'm going to do it like I did it yesterday. I'm going to take this as the 11 o'clock reversal at an area I'm expecting to see price hold right off of the mean threshold of this candle. My stop loss is going to be super tight though. I want to see this. I'm just going by time here now. I'm not using anything else other than time. It's not a Michael thing. I'm just looking at time. I'm looking at this PD array here. Stand by. Someone at my door. I went down there and looked and didn't see anything other than one. I don't know if you had that one turned off or not.
I had it on for the. It was off when we were working on it.
Yeah,
right here, and then we turned it on.
Yeah, it's on. But there's another switch that's off for garage or something like that.
Oh.
Outdoor plugs. Yeah, that's totally.
Remember, we didn't shut that one off.
It is an outside plug.
Yeah. Yeah.
But the dishwasher's not working. So.
This is like. It wasn't working. This. Probably. That was one of the issues before. It was like wasn't. So I did this screw the wire in and like screw it back in, and then it worked. So I'm thinking, I don't know. I think this is broke that block.
Sounds great. Oh, I guess I was wrong on that one. It did come through. I was hoping it was this was the 11 o'clock reversal. I just went with the time. That had nothing to do with any Michael stuff, by the way. It was just the pure 11 o'clock reversal. And there's 11:02. So if it reverses now, then I'll like 2 minutes after. So I'm looking for that 50 to 62% reversal that usually happens at the top of the hour So you can wait for the first 12 minutes. I should have waited for the first 12 minutes. Now you're looking for a silver bullet reversal into the 50 to 62% retracement into the 930. That range from here to here. Look for 62%, 50% reversal, but look for a silver bullet set up here at 11 o'clock. Let's see what happens. Random comment. I'm 53. I wish our current technology ability to trade instantly existed when I was 20s. Oh, I'm 58, turning 59 in a couple of months. So I totally get you, Chris. It's if I was doing this in my 20s, mind you, I would have lost all my money because I was way more impulsive back then. So yeah, this kind of technology has been great. So all the people that are out there that are in your 20s right now, man, you are in a golden opportunity time to understand. If you can imagine, by the time you get to our age, Chris and I, you get to our, or Derek's age, because I think Derek's silver-haired stallion like myself, where you know, you got 25 years of studying this stuff. Oh my goodness, you guys have got your future is set if you spend the time to focus on that. I was in my 20s. You younger folk are extremely lucky to have the opportunity at your age. You don't know, you don't realize how lucky you are. Back in, you know, you think about, remember when Terry Sullivan was in here? Terry was back in the day, they just tied their trades to a pigeon and sent it on in, right? They sent their, they received their trades by pigeon. Pay the trader. Hey, my yesterday's plan for 52.19 on SP is done random. 5219. 5219. Where's that one? Always finding, looking for the upside on there. While we went through the fair value gap 4 hour, I was looking for at least the high of this or the low of this today. It's running right into the mean threshold, constant encroachment. Getting through this, look for this inversion. Look for this inversion fair value gap on the daily above us here. If that continues to push up higher. There's the reversal right here. Body trades above it right here. Trade back into it right there for a long. No reversal here. No body trades below it. This one here. Body trades below it. You come back up inside it to get short to a discount array. Yeah, I know. It's 62% retracement time. Catch that for a further run up. Reversal. Body trades above it. If you miss it, catch the order block that goes above. So you come back into the order block here to continue the upside. So even catching these reversals, you nibble a piece out of here, then all of a sudden you see another reversal. You come back to the order block and then you continue pushing higher. Excellent. Excellent. I guess we're not. I guess I married the idea of an inside trade day, but looks like we're not going to get it now. Looks like we are going to take out this high. 75%. Shucks. Shucks, I'm a goo. All right, well, I'm out. It's way too premium for me right now. And we're not getting our retracement back into 1030. It might be, we might not get that till later. If we could take out this high, then we might get a retracement. Because then we're going to be going into lunch hour for a retracement back down into the range. So that we end up getting these big wicks again like this. We see this was a big wick. That was a big wick. This, I get a feeling, is going to be a big wick as well. We'll have the 3-wick day. Looking for a decent reversal. That's where my eye goes today now. Now I'm looking for, because we're in the high premium range, look for a decent reversal. Didn't really break the 9 a.m. high clearly in my eyes. Not a body close above high time frame is bullish. I saw a 3-minute order block there. Agree. Derek Campbell's an old man as well. No, we don't call Derek as an old man. We call him a wise man. Derek is wise. That's right. Still kick your ass. Double D's are a tag team much for WWE. My mind went somewhere else when you said double D's. Absolutely. Just as impressive, I'd say. You done? You got it? Sure. I'll be right back. No worries.
I checked out your. Yeah. Yeah.
You love electricians, smart people, man. I wouldn't want to mess. The only time the electricity I like to mess with is when I'm shocking you, when I'm welding your chest with a defibrillator. You know, wiring up dishwashers and electrical panels, forget it, man. I've seen way too many messy electrical things that go really bad. So my hat's off to the electricians, all you electrical guys out there. Bless your hearts. Chandra, hi dear, how are you doing today? Good. SMT with turtle soup. Ali, the high of the previous hour candle acting as a magnet. I need to retrace a lot. What do you say? The high of the hourly candle. Let's have a look at the hourly here and see what we got. What's our draw? Ah, yeah, we're into rejection block now. So there is the high, the potential for the high for sure. We've come back into this fair value gap here on the hourly. Let me just pop this up here so you guys can see this clearer. See this fair value gap right here? We've come back up and filled that fair value gap again. A reprice rebalance. This is come back up, rebalance it here over. It would hit it here. This looks like a Yeah, we're back up inside this. We pop up a little higher and hit this. You'd imagine it would take this out here at least. But yeah, you're looking for a reversal anywhere here now. Reversal, come back up inside it, short. That's a reversal right there. Do you trust it though? Here you're back to why have an array if you don't trust it? And it's the 10-10. Should have taken it. We got a body trade below here. I'm going to take this short. It's going to be my last one. If I'm wrong again, then that would have been my $600 I give back today. Again, it's at a key level. Some of you guys might be saying, well, yeah, but there's you're still going to take out the highs here. But I tell you, there's so many times rejection blocks are the key and the highs don't get taken. And it's at a time where I'm kind of expecting a reversal into the 10-10, and I got too many confluences right now telling me this is the potential reversal. And if it takes the high out, then again, the reversal failed for me. Because I didn't wait for this. I did wait for this time. No, I didn't. The body traded below the open, but not below the... This could have been another bear trap. I did not wait for this body to get below here. Because they're overlapping. We'll see. We'll see if I get hammered on it. I have 3 confluences that say rejection block, time, reversal, and 1, 2. Yeah, we'll see. We'll see what we get from here. And we've cleaned out some old highs on the 1 minute as well. So you got to pay yourself there. I've only got 1 on there, so. And if I pull in too tight here, chances are it's going to come back to this order block. So I could be paying myself right here. I'll let it buck. We'll see what happens. That'll be my last trade of the day anyway. There's the order block. So that's where, had I brought my stop loss there, it would have been tagged me out. So I like to see that. Nice reaction off of that. Able to push for lower prices now. You've already come back up inside here. There is that last little piece up there. But I'd rather see that stay open now. 50% of that fair value gap traded back to. A nice reaction off of that. That's good. Now if we clear out these lows here, like that, now I could happily come back into here. I'll go to break even. $5 will pay for my trade. Actually, we'll leave it up here. I'll give it some breathing room. All right, so now I'm going to take this bib tool. I'm going to be above here. Shit. Shouldn't be moving this. I'm thinking we come back into here and here. I haven't seen one of those reversals. Maybe this imbalance right here. Not a good sign. Now it's fully filled. We're going to get taken out here. Son of a bitch. Getting squeezed. We'll see. So it's filled that now. Still no body above it. Now I don't want to see it revisit the high here now. Okay. Bro, NQ sucks. It's just a thief. Dow is the real deal. Let's have a look at the Dow then. Oh yeah. That's definitely it's a lot slower getting down there, but it definitely is no body's breaking that high there. You see that? You got the swing point here, body breaks below it right here. We come back up inside it. None of the bodies broke that old high there. And you're continuing down on the downside. So for here, you close below this order block here, come back up and trade into it to continue getting shorter. If that's the objective. Let's see where that's going. So watch for this one to clear out on the downside. What's Dixie up to? Still back inside here. Immediate rebalance. Back into the order block. I want to see that get below here. Take out this order block here. Break this guy here on the downside. What's oil up to? Oil's reversal. Takes out this high, reversal. Body breaks down below it. Body's going to drop below here. It does. You don't get an opportunity to get back in there. Discount array. Take that out on the downside. Nothing clean in there that I can see. Hold on 1 minute. Nice little reversal here though. That's daily. Hourly's here. Reversal. Body trades below it finally right here. You come back up inside it here. So this was the day that you could get a trade back up into it on the hourly to catch that reversal and continue pushing down. For more downside. Still looking for that downside objective on the daily. So this may be it on the hourly. We're starting to push down into here now. We broke this old low. Come back inside it for a short. Did we ever get squeezed there, hey? So we have a high taken. We've got this inversion right here now. I took out that high. So I don't want to see it go above here now. You got a fair value gap here. You don't want to, mind you, there's no swing here, but I don't want to see it get above here on a close, and I don't want to see it get above here on a close. So I don't see any closed candles get above that. You're all done now? Sorry, you had to come back.
Hey, that's okay. I'm in town anyway.
You are? Okay.
Anything funky goes on again? Just let me know.
Okay, cool. Appreciate
Yeah,
it.
I took that. Yeah, took this thing off completely. That was safety feature. No, it's the same. It's just a different way of making the connection. So this wasn't working. I think maybe it was just the wires weren't working properly. Anyway, I called step on. Yeah. The pump for some reason wasn't making the wasn't grabbing or wasn't connecting. So now it's just straight. Perfect. Yeah.
Excellent.
Should be good. Wife will be happy.
Yeah, I'm gonna watch dishes again today.
Yeah. Yeah, I just messed around for a bit, make sure it's good. Nothing stripped though, right?
No, I didn't see any. I was wondering if that's what was. You mentioned yesterday that it tripped.
Yeah, that was it. Okay. Also, I turned on the ring and it's outside.
Okay.
While I was down there, just.
I didn't know if that had anything to do with that other plugs that we had plugs on there. The wires that are still out there. That's
For the ones that we just installed.
Yeah.
Those ones are live right now. It's completely separate. Yeah. They're live, but we put pull it out or something.
Sounds good. Excellent.
Okay.
All right.
All right. Yeah, you're welcome.
Have a great day.
Have a good day.
See ya. All right. Oh, shit. All right, that's it for me today. I came back and took me out on some bridges. And there's so many opportunities in there to get out too. I'm using the excuse that my one, because I have one on there, that I should hold it indefinitely. So I'm going to find a reason for taking one off every time and not worry about trying to hold it for a long run. Here's an example where that failed, all because of, not because of the rules, not because of the PD array failed me. It's because I tried to hold that longer than, like, through way too many PD arrays. Here's the reason why that failed. Okay, and I'm not making excuses. I'm just saying here's why it failed, because I got too greedy. I was looking for a big 50%, 62% retracement. I was overshooting a shitload of PD arrays here when you could have say, if this is the range I'm in, if I entered in here to go short, and that's the range I'm in, 50%, move to break even. Lucky you're out, you're still in. 62%, now move to 50. It hits, I don't know if that actually connected with 70%, then you'd move to 62, or it would have come up and taken you out here. So you would have been in some profit there, right? You come back up, you can reload on again. You do the same thing over again. 50%, pay yourself. 62%, pay yourself. Or take off your one handle that you've got, or one contract that you've got on, take it off. Start it again. If it comes back up here and you traded through, there's your last and final entry. If it trades through, you go, I'm on the wrong side of this. It comes back, gives you a break even, get out. The reason of the trades were there, but I got greedy. And that's what happens when if you hold it too long and you had all these chances to get out inside a small range here. I didn't take that. So that wasn't a failure of the PD arrays. That was a failure of me getting too greedy, looking for deeper retracements. So that's all me. That's not the algorithm getting all wonky on us. The algorithm's doing what it's doing, running into discount arrays, running back to premium arrays, running back to discount arrays, then extending the range higher. I just got caught because I did not. I'm going to, at that one now, I'm going to just start paying myself at the next array and say, who cares? If it runs away on me and comes back, I'll get in again. And I talk about buffering, but I did not do it at all there. That's why that failed. I'm all right with that now. It failed because I overextended, got greedy. I got greedy, folks. I typically trade minis in NQ. NQ is too crazy sometimes to do anything with, though. I tend to hop in, let it pop or fall a couple of points and set my stop loss at break even. She either goes or not. That's a good way to do it, Chris. Just say, look, I'm expecting this. If it doesn't go, forget it. That's fine. It wants to go to yesterday's high at 18,242. Yeah, now that we broke this upside here, broke this to the upside. See that? Broke it to the upside, come back down. Didn't even feel that fair value gap. Did bodies did respect that. When you break the premium array to the upside, chances are you're going higher. So now you're looking for these old highs here. And those of you who are in the hourly are saying, well, of course it is. We've been in it long for, if you've been in this, there's nothing here. I was going to say, if you're in this long, you'd be in it from back here, aiming for up there. You had to endure a lot of drawdown here in the last few hours, but discount premium array. You're up in the premium now and extending. I think I have 55, 100. Where was the 630, 420, 520, 4, 3, 335, so 2, 985, 1, 30, so I'm still up 130. After that, we're still up 130. Move to the sidelines with your $100. At least my live account did okay today. I didn't do any more in that one. Oh, Tristan caught a nice little midnight snack back on April 29th. Remember to start looking at these ranges and pay yourself. If you only got one on there, either move your stop loss real quick or just pay yourself at the low, pay yourself at the discount array. I've been rambling on about premium and discount arrays and not paying myself at those. So that was totally my fault. Totally my fault. Yeah, there was nothing wrong with that. So I don't want you guys to think that there was something, this just threw me off. This was greed, and I did not, I stopped reading the arrays and just went, I'm going to 50 to 62% and totally skipped over the ranges that we were in. So they were in there. I just did not grab them for sure. So now you got, this could be just equal highs. We want the highs to get taken. That's what people want. So it'd be a great opportunity now to screw them over and say, we're not going to give you your highs. For me now, I want this thing taken out on the downside. We want to see a significant break to that, and I want to see something with intention to get down there now, not just a small reversal like this. I've been bitten a couple of times, so now you want to see something significant. You want to see this getting the hell down there for a run back down into these lower time frames. That will leave this open as, again, relative equal highs to come back and revisit later. And that would still keep us in our day. Yeah, it still keeps us in our internal range day. So give me a body right through here. Come back up inside this thing. Big bull candle now. Then I'm going to say, all you hourly people that were looking for an hourly run, you were denied. Rejection block again. You sometimes don't get your highs. We gotta close below here though. You still might get it if we run back up above here. We've taken this gradient fair value gap in here, trade above that, get support at it, and then go higher. You're between this one here going shorter and this one here going higher now. Which one do you suspect is going to win? So now you're looking at this one. Body's got to get below here for me now. Give me a big bold leg coming down now. You sent me a DM. Got it. Okay. Thanks, Tim. We've got a body below here now. Trade back up inside it. Get short here. We've got below this candle here now. And that one. And yes, the potential is to run all the way back up into here. But I want to see this order block hold price now and continue going down. And this is where we're going to start paying ourselves. As soon as we take out that low, I'm going to start paying myself like I just said I was going to do. I got to follow through with my rule now, even though I wanted to come all the way down here now. I'm going to pay myself. Right there. There, I paid myself. I followed my rule. Now, if it comes back to me one more time, that'll offset. I don't know what I got out of that. 150 bucks. Got to follow your rule, right? So if it rips off down here now, you can just sit there and wipe a tear from you, right? But you got 150 bucks for that low. And my live trade's still going good too. Come on down. Rip it down now. this candle here. Going short. Man, that really get a good squeeze on that day. So far, your rejection block for your hourly people, I tell you, those suckers are painful. When you come up there, you're expecting that high to get taken and it doesn't. It rejects off of it. It could come right back into this order block and then finally run up there and take you out. So you could finally get what you're looking for. Right now, you're bearish. You've taken out this breaking market structure to the downside, body below it already. You come back up, find some support at this and get lower, or wait for a reversal to happen. Now that we've taken out these lows, this is a little imbalance right here. Now that I see that, okay, good. Trade back through it. Adjust. Locking in some profits there. So for your hourly people, if you still want this high to get taken out, this mean threshold has to hold. Ideally, you'd like it just come back to the body high here, which is just in the rejection block of this. Hold and start reversing and get back up in there and take those highs out. You don't want to lose that mean threshold here and get back into this daily fair value gap. And that is going swimmingly. I managed to get in this one off here, the reversal. And my live one, I'm still going short here. Weathering this and continuing down. So I want to see this get down into here now. Because we have premium discount. So we want to see it cut through this and then start getting into that 62% retracement we've been finally waiting for this whole freaking morning. It happened late in the 11:30, 11:31, 11:32 reversal. You want to get a body through here now. Closed out my trade in here. Premium discount. That's not 50% yet. Not even close. So if we come back up into here, I'll get short off of this one here again. Stop will be here. If a body closes above it, I'll be looking at this as a reversal. Oh, gave me a kiss. And gave me a kiss, but wouldn't take me to the prom. Too precise. See, that was the, I bet you that's the spread right there. That's one thing about MT5. Those suckers that got the big spreads that open and close all the time, so they got me in there. And look at this high of this candle here. The high is 206.75. The low of this candle here, 206.75. So I was right on that, 206.75. That's my entry. So it was literally that spread that kept me out of that trade. That's when you are too precise. Isn't that a terrible place to have? Is that kind of precision? That's cocky, sorry. At least I got in on my live trade. I'm out of here. Goals met for combines and PAs made up yesterday. Small losses. Good for you, Chris. Congratulations again, buddy. Well done. Well done. Have a great day. Wish you all the best. I'm happy for you, Chris. Really, seriously, man. Happy. Good for you. Well done. Well done. Chris passes his challenge today. I love it. Soyuz. Hello? Who's this? What? You got the wrong name. No, wrong name. Idiots. I think he can just rip you off. Man, they're so stupid, some of these people. They're so stupid. Like, they have no idea what they're doing. Sometimes you just go, you can hear all the people in the background chattering, and you can hear that they're just, it's one of those call centers. You think, dude, you are not here for my best interest. Little scam artists. And all you have to do is just get short with them, and then their attitude changes, and they start getting bitchy, and they start swearing at you, and you go, okay, yep, you're a real professional call center. I can tell by the verbal assaults you're giving me right now, so I'm out of here. Keep an eye on symmetry. EU, GU heading down, indices heading down, DXY heading up. Will it last through lunch? Is it just lunch move, or will it take us through the end of the week now? Caught the top, boss man. Up 147 ticks. Ooh, hoo-hoo. He took the high. Good man. Good man. Well done. This is ICT your father. This is ICT your father. Luke. I figured out how to talk on the cameras in our house last night. My wife was in the living room, and I'm like, she's like, what is that? I'm like, Harry Potter. She had no idea where it was coming from. Who is that? I'm like, I'm coming for you, Harry Potter. And then she realized it was me. Where are you talking from? are you doing that? I see you. Oh, look at this. This is a lunchtime delight. Look at that. Denied with precision. But we ain't over here. Right over here, we are doing some tasty trading. Yeah, baby. So I caught this on MT5, but this spread once again did not get us in. We would have been in a nice little reversal there, back to here. And my God, Invest is probably just killing it right now. If you're 147 handles back here, oh man, you're over 150 now. Market maker sell model for NQ for the day. Yeah, I'm looking for this to get all the way back down into that range again. I want to see an internal range day. We're just short of it here. And I want to see that pull all the way back down into here. Just come right back inside that range. Settle in here somewhere would be nice. Hold on, Timmy. You got yourself a nice little tiger by the tail there. Manage it from the back end, whatever way you manage your trade. How do you manage your trade, by the way? How do you manage this on the back end now? Do you trade from PD array to PD array? Do you trade like to like? Do you have a fail safe? What's your method for managing this now that you're in a bomber trade down? $207 now. Nice. 207 handles. Good man. Just now, SMT and US 100. Chofu? What's chofu? We got our 62%, 50% yet. We're coming up for 50% now. Here's 50. Bang. You pay yourself a portion there. I'm going to move my stop into here. There's 50% retracement of that entire range. We're looking for around 11 o'clock. We got beat up in here multiple times, but there's your 11:30 high. Reversal. You don't catch the reversal. See how the body traded through it right here? And you didn't get a chance to retrace into it. So you look for the order block. Body trades below the order block right here. You trade back into it here. Get short right there. So for there, it's 218. There's 70 or 18. So there's 30 somewhat handles there. From there to there. 40 handles. So if it bounces off this here, look for a reversal now. And no reversal, drive. Keep the drive alive. $62% puts us right in a perfect refill of this. Optimum trade entry to continue short. I'll take one there. This time I'll put in my stop, my little thing here just below that. And I'll put the stop just up here. I'll make sure the spread lets me get in this time. We don't want to be too precise. If I don't get it, I don't get it. If it takes out this low here with a body, I'll close that trade. And the reason is if this closes above this on a reversal, like a body closes above that, then we're running for this high. Then I will look at this as a potential reversal. So I wouldn't want to mess with it. You can go back long again. And this could be the one that people are looking for the hourly friends there. Where's the hourly now? Yeah, see how we're digging right into the top of that fair value gap above us or below us here, and that in a mean threshold, that's where you want to see it hold price, which strangely enough is sitting right at 50% of the range that we're looking for the day. Is that a coincidence? Ooh, who knows? Multiple overlapping arrays here and confluences that this would be a great place to see a reversal. Could we dip down into the mean threshold of that candle? Put some pressure on there as long as the body closes back up above 50% on the close of the hour. Oh, mind you, we're just starting the hour now, right? That one closed up above. It tapped it, closed above it. This one's starting off. We may see a wick down to the 62. Puts us right there on here. This little wick below, these little mohicans or these little wicks that you see, the little hairs, that's just dipping into the discount array, which is perfectly acceptable for the 50% run back to discount and then start running higher. And you see how these attempts to get down in there on these wicks and the rejection off of it. I'm getting the feeling that I don't know if I want to keep going lower just yet. I'm going to wait. We're going to wait and see. Changing of character. Yeah, right off of that 50% fill. That's the range after 11. Done. So watch these levels here now. I want our hourly folks to get their highs. If they get that high, or even a push back up into here, 215, 212. So Tim, think about how you're managing this now that you got your 50% of your range. Are you, watch you don't overshoot. Watch that you've got whatever your method you got for managing your trade from the back end. Or if you've got an objective of saying, look, I just want to reach down here or reach down here, then let her buck, man, whatever your method is. Where are we sitting at for the daily again? Yeah, I still think it's coming down. Reversal there. Close right on it. Need a body close under 176. Yeah. This is that range. 50% is right there on that. And 62% is right in here of this small range right here. So we'll see how this holds price. If this starts to break above, we get a body above this, like a significant body comes back, taps that for some support, then this is looking for a range run back up and higher. It's got to get at least back up into the high of that fair value up there, because that's 50% of that small little tiny range. So there's no reason why it would want to come back up there without moving into a discount array, or premium array, I should say. Like that. That's right there. That's 50%. And it just popped over it. Now you want to see that head down. If it doesn't, then we're looking for 62%, which is up in here. Do we have a body trade above it? Now see, this is one of those ones you want to see it hit it and then get the hell out of Dodge. Right? You want to see it get out of there, like quick react off of it. You don't want to see a constant revisit it. To me, that's the algorithm starting to push higher, right? So snap off of that, get down here now. The fact that it keeps working that higher makes me think that we're going to go a little higher here yet. Buyers are stepping in, man. That's the reversal. We've taken out this low here. That body starts happening above here, 39 seconds. Now we've gone up to the 62% retracement of this range. Just I'll pull it again so you can see it. Bang, there's 62 right there. You got 19 seconds now. We come back into here. You want to see that snap off that and start getting right down below here. It says look for a silver bullet into lunch hour now. We don't get an opportunity to get long here. If you're looking at this price here, come back up and balance it. Body trades above, comes back inside it. Yeah, there is a little tiny, see that gap right there? Body trades above it, trade back through. You might look at that one. You might look at this one. Body trades up, all the way through. Stop loss would be down here. These become important levels. If you want something that's clean, that one there. If you like these little imbalances, they all also act like fair value gaps. So now you're looking at the range, a different range here now. Remove. Now that we've got the reversal happening, look at the higher range. You've got this fair value gap here. You want to see that break price, and here's your confirmation. We break the low, come back up inside it. See the body breaks below it right there. Come back up to the wick or the mean threshold, consequent encroachment, and then push through. Mean consequent encroachment again. Come back, tap it. Inside this premium array, from there to there, that's a premium. So if you reverse and come back down now, look for a run back into here, and then a potential run back up again. Look for this range here, and that might be more than 50%. Yeah. There's the tap. You want the bonus one, wait for it to come into here, because if you're wrong, come back, you can hit break even. You're in lunch hour. This will be whether or not you confirm whether or not you were going lower and you just came back to a higher premium array. And this is above 50%, so just tapped off of it. So that's entry 1, 2, and 3. The third one is your ideal one. In case you're wrong, you can come back and get out. But one's giving you a lift right now. You got to get through the mean threshold here. Did anybody take this, the reversal to this, and go higher? This is where Chris could say, well, I'm moving my stop loss right into here now. I'm going to be in profit, pay for my trade, and see if this carries on. It should just keep going up. You shouldn't have to come all the way back to here. We should just, you want to see that kind of stay open now and just start running if you really want to just tap it and go. So he's guaranteeing profit. That's where he moves his stop loss real quick into here. But there's a logical reason saying you wouldn't want to see, now that you've broken this, you wouldn't want to see the mean threshold of this candle get taken on the downside. So you want to see that continue going higher. So now if you're really cheating, you want to move it up just underneath the mean threshold because you don't want to see it come down below that. And if it takes you out, well, you made a couple of bucks. This is good. Continue higher. That is the reversal. Yes, indeed, QT. And that's precision. Single first entry. 1, 2, 3. Single one entry. Now, Chandra says, notice on hourly candle previous rejection where the down close candle didn't cross the high of the up close candle hourly. Let's look at the hourly. Let's look at the hourly here. I want to see what you mean here. You said notice on the hourly candle previous rejection where the down close candle didn't cross the high of the up candle. There's not, you got to be more specific there, Chandra. I don't know what candles you're specifically referring to. But now the scenarios have been changed. Yeah, that's what we're talking about, is this candle here. When it gets validated, we wicked all the way up there and came back down into the mean threshold. We have not lost the mean threshold of this hourly candle. And we've also caught this little run. You takes this low out here and all this stuff out here, this last up close candle before this big run down. You broke it to the upside. You came all the way back down through here, all to the upside. Now you're back down hitting this thing again, reclaiming that order block here. Or this breaker. No, it didn't break that high. So yeah, we broke this high though. Yeah, I don't know what you're specifically referring to, but I do like the support off of this candle here and the mean threshold. If this candle was the one I was more interested in seeing the hourly people catch their run for the high now. And it supported, everything was supported off of that 50%. All those wicks attempts to get down in there. And then when you see the reversal, breaks above, comes back, finds support at it, continues pushing higher, breaks above now, come back inside order block, start pushing higher. I suppose there's this one here and that little piece that's left here. Oh, back to that little imbalance there as well. So I didn't see that. Mean threshold. Head on up now. Ah, watch this one here now. Big slammer. So if your stop loss is sitting here, you just got it taken. If you can't catch this reversal, taking out a high, taking out a high. And this closes below here. Look at this order block to give you some support to continue back down into your discount range again. And you're pretty close. I think you've hit your discount range already, haven't you? Lunchtime. Gotta love lunchtime. %50 right there on the money. Yep. Body, this is already closed below the mean threshold of that candle. So looking for a further dig down. You're already into the discount range already. So there's nothing else really down here other than the order block here. We've come back, rebounced this all the way to the bottom. Now the wick or the mean consequent encroachment. Tap this one more time on the next candle. Are you between premium array, discount array? Tapped it. You ran it out here. All the way down, straight down from this one to this one. Didn't even get a chance to get on it. Opened, came down one more time, came back up, tap bottom to top, discount to premium. Now, which way you're going to go? You got to break above here for this swing. Take that high out there with a close. Mean threshold, got to go, and then start pushing higher to stay in price action. And for it to go lower, ask yourself, where does it have to close below? Oof, to prove that you're going lower. So have a fail safe. So if you're going long on this and you have a fail safe, where does it fail for me? Well, it fails for me if I go below this candle again, then we're running back into here. But if I want to support this continuing going higher, I need to stay above that candle there. So this is the first line that we've broken above it. So this reversal is not holding right here. There's my first evidence. And for this candle here to support that swing, I need that candle there to break the high like we did here. It breaks the high, comes back, taps it, goes. So that's what we're looking for here to continue on the upside. Again, staying in price, what we're anticipating, where we want the next candle to form, and how we want this price action to continue. And you're watching each candle now forming the way you want them to form. That's staying in the price action. How often do I move my stop loss in a winning trade? Well, I've showed you several different methods I use for doing that. One is using the fib tool, the 50-62%, and just drag your fib tool down if you've got a very low order on, or you want to hold it because you expect it to go over a longer range. You just drag your fib tool down along each one of those specific points in your fib tool. Or you go from PD array to PD array, like array to like array. There's another method you can use. Or just a trailing stop loss or a fail-safe stop loss, trailing your fail-safe stop loss. So I use two methods. Mostly is the fib tool and the trailing, the failing or the fail-safe stop loss trail. So see how we wanted this to do this? Trade above it, right here, trades above, closes, come back, find support at it. Now I want to see it go higher. So this is staying in price action. This is watching price and it act the way you want or expect it to act. And if it changes up, if it busts through here, like if we end up ripping through here and coming back, then I'll go, okay, now I'm looking at what range am I looking in here? Well, I'm looking just to get back into this order block here right now. So I'm really between, well, I'm not even between that candle. I'm really between here and here. And now that you've caught that equal highs, you want to get going, like get some legs in here, get going. We found support at that. If you're watching the candles and you're saying, this is how I want the candle to form, this is how I want it to move, and it's doing exactly what you're saying, you're staying in price action. You're understanding the algorithm as it's forming. Now you start doing this on a daily chart and you start picking your entries on this on a day chart to go in a specific direction. Man, you've caught a massive all-day run here. If you catch it right, you catch the swing point at the right time and price of the day, you catch these big long runs because you understand better what's going on here. As you can see, I still have issues with the psychology part of my trade, my self-doubt, and I'm not afraid to admit that. I can see these huge runs, but my panic kicks in and I go, I got to get out. And I talk myself out of the trade. That's the problem when you're bringing in a 1 minute. chart like this, every time you see a break to the upside or change in direction, you go, oh, it's changed direction on me. I want to go short. It's changed direction on me. I should get that trade out instead of going, well, allow it to come back into a 50% of that big, huge range and then continue on. I don't want to lose anything, so I want to try and keep constantly snapping up my profits on the way down, except for this mess I made over here. So here's your next fair value gap here. You want to see that start chewing into that and start breaking through that, getting on top of that, and do that rock climbing thing that Michael likes to talk about. We've got support here. You've got your first level of support here. You want to stay on top of that now. Now that you've taken out that high, what's the next thing you're looking for? Right here. I've got this one going higher and this one going lower. Quickly look at constantly look for these things and look for whether or not you've taken out a high or taken out a low. Look for the significance of these. And then you say, these become important to me. If I start to degrade down and trade through this on a discount array inside the smaller range, and I get underneath that, then chances are I'm going to run back into here. If I just come back to this, find some support, dip into that, I'm all right. Because, you know, mean threshold is still potential for it to hold. So you can let it wick into that, pop back up. As long as you're still staying above this, you're gold. If you get the trade below, then you're expecting a run back down into the discount portion again. And I don't like all this waffling here. Give me some damn candles. Because you can see this schmuck down below this, blow this whole thing out again. So keep those things in mind in terms of where it fails for you. Where does this trade fail? Where do I expect it to provide support? Sorry, I'm getting tired here. How often do you trade this? I told you that. I think it gets to 211 and then dump more. Why? Why would you say that? Why would you say that, Tim? That it's going to get to 210 and then dump more? Is that what you're hoping for? I get that. If you're hoping for that and you're saying, well, there's an optimum trade entry. If it's an optimum trade entry you're expecting, like a reversal at an optimum trade entry, like if you're saying 310, you said at 62% of this whole range, sure, that'd be safe to say. But you can't guarantee it's going to do that. You don't know it's going to do that. So you stay bullish until you see anything that changes your mind. Like this, for me, changes my mind. This changes my mind. One's going short, one's going long. We've come back, filled that, which is what we said we could allow for a wick to come back into here. And it did. So as long as we have a body closing above here, which we did, that's acceptable. We said that was an acceptable thing, and it came back and did that. Now, what it does here is if it closes below this, comes back in, we're looking for, we've worked the premium of the premium. Now we've got the discount of the premium, which is the mean threshold. Watch when I pull the fib tool here. You got to stay inside this, the range that you're playing in right now. When you're looking at the 1 minute chart, you've got to stay inside the range that you're in. Quarters. Premium discount of the premium array. So you've reached down into the rejection block. Ripped all the way through that. Big damage, lots of wick mess. We're still trading up a body above here. Wick did the damage. Body closed above, you see that? So now I don't want to see more than 50% of that wick let go now, because that's the mean threshold. You've already eaten through this, so it's losing its strength right now as a support, because that's a breaker. Takes that high out. And you've already eaten into the breaker once, eaten through all of it, and now you're coming into it again. So it's starting to lose its luster for a high now. We'll see what this candle closes. You don't want to see more than 50% of the wick, which is right there. Ten, 9, 8. 3, 2, 1. Now you want lower. Mean threshold. Once more. Body's traded below here now. This whole idea, did you pay yourself at that high? Did you pay yourself at the rejection block? If you got in here, did you pay yourself right away? Like real quick inside that range? That's the discipline to recognize the range you're in, which is what I got caught on over here. Discipline to recognize, look, this may be all I get out of this. Like, don't shoot for 20 PD arrays above you. What range am I in? Can I snatch something out of there and quickly move to break even and wait? So you get to see all this chop we didn't like to see. We want to see it get out of dodge, and it's not. Then it just degrades back down into this small range here, and it's eating through the mean threshold of that candle. The bodies are holding it there. That one's a little low. Come back up into this range. That old candle's low right there. You want to see that kind of degrade back down now. Now, if you're in that premium discount, just popped up into the premium again. You just see it right there. Now you want to go down to the discount area. Staying on the horse, folks. Staying on the horse. Takes the lows. Now you're into the discount of that range. Right back into breaker. Takes out these highs, or this high here. So remember I was telling you about where does it fail for you? Right there. It fails. So if your entry was to go long there and it failed, you enter in here, it comes back up, gives you one opportunity, two opportunities to get yourself out of entry number 3, entry number 2, entry number 1, right? If you're going to go long on those, 1, 2, 3, it gets you an opportunity to get out on your third one, and then it gives you an opportunity to get out on your second one at break even before finally coming down. Now you're into the discount array, the discount side of it. We worked the premium of the premium and the discount of the premium. We went back from premium, discount, back up one more time into premium, and then boom, down into discount, overall discount. And Michael talks about this, in the core content about the range that you're in. If you broke it into quarters, you have a premium level and a discount level, and then you have a premium of a premium and the discount of the premium of the discount of the discount. And then they further break down even further into smaller time frames. So run all the way back down to breaker, run back up. So we're discount, run all back up to, that's all we need to gather up our orders now. You want to see this fair value gap, hold price. If this trades all the way through, look for this to provide a level of support. And it closed above. So look at that, it literally closed and opened on that same damn trade. Wow. That's incentive to get the hell out of here. Eat through that candle. So you see how, look at this candle's high. Let's just see how close we were. The candle's high is 19525. This candle here, 1955. So it's 0.25 above that. And this one, watch this one. High 1955. So it literally came back, or sorry, the low is 125. So it literally, that 0.25 above from there to there, open, came down, tapped it, and then boof, left. That's how quick that was. And yes, it could be as small as 0.25. So when you see a candle rip all the way through your objective that you want to see it come back to, you go, oh, that's a good sign. Then it rips all the way through that one candle that initiates the run. Then you go, oh, as soon as it trades above that on a close and it comes back to it, I'm going to get long on that. Well, you would have literally gone bang, bang, bang. And within a second or two, it was off to the races. So you wouldn't have had an opportunity to get in on it. But if you had a bot that could recognize that, it would have put it in a microsecond and caught that trade. Because the bot responds on the close of that candle, quickly analyzes that one, and by the time it comes down there in that microsecond, you would have been in. That's the good thing about bots, is they can act faster than you can. They can click in a trade faster than you can get in. But again, where were we? That high is 2.5. That low is 2.5. So what does that mean? A 0.5 spread wouldn't have got you in anyway. That's too precise. Like that one that we had up here. I was too precise, couldn't get in. That would have been too precise, you couldn't get in. Anyway, you know, you get the point. That's the precision of the PD array right there. Think it gets up to 210 and then dumps more. Okay, well, here's your 210 coming up. Let's hope it dumps. The 9 a.m. candle. That's right off this candle here. You're just shy of it now. One handle shy of it there, Tim. Okay, I think I'm going to come to a conclusion, a close on my day here. I got a bunch of sanding to do, some drywall dust to make. So I hope you guys have an awesome afternoon. Let's see, I'd like to see this. Remember, you never got an opportunity to get in here, so this will play an important role for me. It becomes an important role later on. Because you never had an opportunity to get in on that, it'll come back and revisit that for you later on once you're in one of those pullbacks into a range. So if this starts to pull back into the range now, you'll see this little small piece here. Watch that to reverse and then get back into the discount portion, which is in here again before climbing back up higher. Or if you blow through that to go lower, because it's in the discount portion. Premium, discount. Anyway, keep those things in mind. If it does keep pushing higher, look for the premium of that whole array right here. That's your discount one. That's your premium one. Look for a run all the way back up into here. And if you keep it, great. If you break above it, look for higher prices and look for those highs that get taken again. So that's where you are right now inside that big range. And you've already worked your entry here. That's the upside objective for me. And yeah. And you may get it by going back and forth between these two and doing something like this. Where's my path button again? Doing something like this. So you go from here to here to here to here, there, there, and then run for I'm making it look like it's actually, yeah, it's really going to do this, Darren. Then come back into here maybe, and then go back up for there. How's that? So you're kind of just going down to this array, coming back up, coming back to the bottom of this array again right here. Then running back up to that one, coming down to the bottom of that one. That's what I'm looking for. Then come back up, maybe find support at this one, off of there, and then run back higher. I'll leave that on there just as shits and giggles. It'd be hilarious if it made it, but anyway. You wish you could help with that, the drywall. Oh man, I need somebody to do all the mudding. My OCD and ADHD, I get obsessive over it, and I just sand and sand and mud and sand and mud, and then you go through buckets and buckets of mud because you're not happy with how it feels. Anyway, in I go. I hope you guys have an awesome day. Thanks so much for tuning in. If you liked what we did today, hit the like button. If you don't want to hit the like button, no big deal. If you like to subscribe, we're here every day, mashing around on the charts, trying to stay in price action. The whole point of my doing this with you guys is to try and show you how to stay inside price action as much as you can. How you utilize that for your trades is entirely up to you. I just want to show you kind of how to stay in price and recognize the ranges that you're in and the arrays that you're in to support either your higher or lower objectives. So anyway, I hope you enjoyed yourself. I hope you got a chance to see 1 minute by minute price action. And like I said before, if you weren't staying in price action within a few minutes, you'd see that we have no idea what we're doing. And as you can see, it does work. It's always, the algorithm's always moving. This isn't just random wicks and candles. They're going to specific places. The candles are acting the way we want them to act. So anyway, I hope you enjoyed yourself, and I will see you guys bright and early tomorrow. Keep your powder dry. We're near the end of the week now. You don't want to give back all the profits that you've made today. So, or this week, if you've made some good profits, move to the sidelines and start trading your demo, practicing your price action. And you don't have to be putting trades on to practice price action like this. You see, the majority of the time, I'm constantly talking about price action, and very seldom am I putting live trades on, especially. You'll see demo trades on there, but really kind of practice this stuff, and it'll improve where you guys are looking on your higher time frame objectives. Anyway, I see you guys tomorrow. Thank you very much for tuning in. And we're 701 people. So welcome, 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 all 700 people. I love you all. Thank you so much for turning up. Thank you for spending your time with me, and I will see you guys tomorrow morning.